to look at anything specific, now's a good time to talk about before we really get into things. All I can say is Bitcoin is pumping. It is ripping right now. It's over 44. We'll see if it can hold that high, but man, shit is moving. Love to see all these big green candles in the market. What's up, JT? How you doing, brother? Glad to have you with us as always.
Hi, everyone.
Cool. Yeah. So just to give you a heads up, what I am going to do is I put basically all the slides that I want to review as a Tuesday trader session in order. So we'll go ahead and review kind of all of those, and then I'll pull up Thor and Thor Pro, and we'll go over them. And then we'll just do a brief recap of the charts to close out. But yeah, it's going to be the Trader 101, and I'm going to have just a bunch of slides and everything. We're going to go over the fundamentals and the basics. That's cool, man. Never apologize for the kids having a good time. But again, does anybody have any questions before we get started? This one's going to be a little more structured instead of Mo just talking a bunch of shit and drawing lines for 2 hours. So, if you have questions, want to go over anything specific, now's a good time. All right. Well, we'll give it about 2 more minutes, 7:05. We'll kick it off and start the official Tuesday Trader trading session 101. I don't know if anybody looked at the Tuesday Trader update that I posted. But we had broke out and made a higher low and then gone for the higher high and right into those 4 4-hour short calls by Thor. And 2 of them have hit take profit 1 now. So congrats if you took them. We posted them last week and we actually mentioned them in an update. But we'll go over that when we look at the charts a little bit later. What's up, Annie? Glad you're with us. Yo, what's up? How you doing, man?
Good. Just chilling on this Tuesday night.
Word.
Seeing what the markets are looking like.
Dude was just saying, Bitcoin's fucking ripping, man. 44.1 right now and rising.
Was not planning that at all, dude. But it's funny because, like, of course, all the alts are, making jumps, but Sol, I feel like someone's just keeping Sol down.
It's still undervalued, man. I think it's still gonna rip. We left off talking Bitcoin. There was this short that hit, and it actually hit take profit, and this probably was take profit 2 area, and this was probably take profit 3 area. But we set this line as we wanted to see if we could break and hold above this. And man, look what happened after we came down with another retest. We found support on it. We found support on the EMA. We found support on the RSI.
Yeah,
we broke through that ceiling. Sure. Dude, and just even after breaking that ceiling, temporary ceiling there, we're up another 15% right now, which is just crazy. We all know it's coming though. That's why we're bullish on crypto. But this is going to be just a recap again for those just joining in. This is going to be a Tuesday Trader That's a trading 101 session. So basically, we're going to take it back to the basics and kind of review everything, the fundamentals. If you know nothing about trading, or whether you just want to sharpen your knowledge on trading, this is a good one. And then at the end, I'll jump back into charts and we'll look at where we left off, what we were talking about last week, where we are now, and all that good shit. But this looks a little confusing right here. So we're going to get rid of that for right now. And we are going to start from the beginning, as if you really don't know much about trading. We're going to start where we all started, basically, and go through the basics. So give me just a second, and I will get these pulled up. It's been a while since we've all gone through this, so hopefully some of y'all learned something new. And, a lot of you should know this. If you are placing trades in any way, most of this is stuff you'll know. But I think this is a perfect ground floor of fundamentals to start with for Trader Tuesday and new people joining into Cyber Frogs and new people that want to learn how to use Thor. What is Thor? How do I trade? How do I take advantage? How do I get part of this money-making Cyber Frog community? You know what I'm saying? Frogs fuck. I want to make some money too. So we're going back to the very basics, right? And we're going to go through the basics of trading and the basics of Thor. And one of the very basics, you'll hear the terms long and you'll hear the terms short. What does it mean to go long? What does it mean to go short? We're going to keep it short and simple. To go long means to purchase an asset with the expectation that price will increase, right? You're hoping to buy it low, and in the long run, it will go up, right? Purchasing an asset with the expectation price will increase. So what is a short? To short is to sell an asset or purchase a contract with the expectation price will decrease. So you either sell what you have and look to buy it back lower to make a profit, or you purchase a contract for a short with expectation that price will decrease. So long, you hope price go up. Short, you hope price go down. Pretty simple. Now, when you're looking at Thor, you'll see TP and SL. What does TP and SL mean? That means take profit and stop loss. So what does it mean to when we say take profit? That means closing a trade or a portion of for profit. And you'll see in Thor later when we look at Thor and Thor Pro, you'll see it labels these profit zones as TP1, TP2, and TP3. So just brief example. Let's say I purchase 10 Solana to go long. Let's say I purchase 10 Solana at $20. Well, TP1 may be at $30. And if I bought 10, maybe I'll sell 3 here. So now I still have, so that's selling a portion, closing or selling a portion for profit. So TP1, I can say, I sell 3 of those Solana. TP2, let's say I sell 6 more, and now I've got 1 left when I hit TP3 or however you choose to do so. But to take profit means closing a trade or a portion of that trade for profit. On the contrary, what is stop loss? That is closing a trade or a portion of, but usually closing the trade to prevent any further loss. So if you are going long on the market and the market is going short, your stop loss will prevent you from continually losing more. So let's say you buy Solana at $10 with the expectation it's going to go up to 15, right? Maybe you put a stop loss at $9. Because if it goes lower than 9, maybe it'll go down to 5, depending on what your TA says. But if you are going long, use a stop loss in case the market goes short, and it prevents you from losing more. All of these will also be in the Tuesday Trader Review in the Discord. So you can go back and look at these at any time. And if someone has questions on these, we can go back through each of these slides at the end. And if anyone has questions, don't ask. Okay, you'll hear us say DCA a lot. What does DCA mean? That means to dollar cost average. It means purchasing or selling to change the average cost of a current position or holding. So an example, you buy 10 Solana at $30 and SOL dips down to $20. Well, if you buy an additional 10 Solana, you now own 20 Solana with an average cost of 25. So instead of your cost being $30, you DCA, you dollar cost average, and anybody that pays attention to the Thor automated contract, you'll see it buys on the way down to DCA in, and then sells, takes profit at different profit points on the way up. So DCA is purchasing or selling to change the average cost of a current position or holding. One of the most important things you'll hear us talk about, we'll talk about it a lot, we'll go over it a lot, is one of the most important things you need to understand before you begin trading. And that is risk management, your risk reward management. Risk management is one of the most important things in becoming a profitable trader. Risk reward management is calculating, understanding, and accepting the risk versus reward of each potential trade. Right? So again, calculating, understanding, and accepting what the potential risk is for what the potential reward is for each trade you open. Simply put, how much are you willing to lose or risk on each trade if you're wrong? What is the upside if you're right, and is it worth it? So you have to say, well, I'll make this much if I'm right, I'll lose this much if I'm wrong. Is that a good ratio? You need to manage your risk. We'll get deeper into this when we look at Thor and how to use the risk management tool directly provided by Thor right there where it's making the calls. And it can show you for each call how to manage your risk and where to put an appropriate stop loss based on your risk management and your risk tolerance. So again, important terms, DCA, dollar cost average, purchasing or selling to change the average cost of a current position or holding. Risk management, calculating, understanding, and accepting the risk before placing a trade. Important, we'll go over that again for sure. Now, this I think is where a lot of people get confused in trading and in Thor signals. And that is in the different time frames and what the different time frames mean not only on the chart, but what's it mean for one of the Thor calls looking at the different time frames, right? So when you're talking about time frame, the time frame of a chart represents the amount of time it takes for a single candle to open and close. How long it takes to print that candle before the next one begins. So if you're looking at a 4-hour chart, a candle is going to open and it is going to go up or down for the next 4 hours. And then it will close and a new candle will open and begin its price action. Vice versa, a 15-minute chart, every 15 minutes a candle is closing and a new one is opening. So the larger the time frame, kind of the more macro flow of the market you're looking at, and the shorter the time frame, the more immediate moves and kind of instant volatility you are looking at. So again, the time frame of a chart represents the amount of time it takes for a single candlestick to open and close. How long it takes to print one candle before the next one starts. The importance of time frames. Different time frames will affect the amount of, potentially, the amount of time you have to enter a trade and how long a trade may potentially take. Now, again, there will always be variations and exceptions in the time estimations I'm giving you here. If it wasn't, trading would be too easy. You know, trading, I believe it was Warren Buffett that said the markets is the flow of money from the impatient to the patient, right? So what's the variable there in impatience and patience? Time, right? Time. So there will be variations in this exception. So one thing I get asked a lot, and so we'll just say right away, no. A 15-minute chart or a 15-minute Thor call does not mean that you got 15 minutes to get in, or once the trade starts that you should expect profit in 15 minutes. That is not what it means at all. A 4-hour chart, a 4-hour Thor call does not mean you have 4 hours to get in. It does not mean you should expect profit in 4 hours. Well, if that's not what it means, what does it mean? So Thor will make its time frame calls. Its calls on 4 different time frames: the 15-minute time frame, the 1-hour time frame, the 4-hour, and the daily time frame.
Oh, that's your.
Yo, Turdo, you mind muting?
Sorry.
No worries, man. So the time frame estimations, like I said, a 15-minute call does not mean it's gonna take 15 minutes to play out. That's not what it means. So what does it mean? A 15-minute Thor call, which is taking a trade on the 15-minute chart, could potentially take, after it triggers the entry zone, could potentially take a couple hours to even a couple days to hit the take profit point, right? So the 15-minute call on Thor, that trade could potentially take a couple hours to a couple days to hit take profit. The 1-hour time frame, trades and Thor calls on the 1-hour chart could potentially take that day or up to a week, potentially maybe even more. So you're looking at, again, you're looking at a trade that's going to take that probably 24 hours to potentially even a week, as opposed to something that's going to take a couple hours to maybe just that day or 2 days. Now, the 4-hour time frame, that's what we generally focus on and the time frame charts that we look at here on Trader Tuesday and we break down. Why? Trades on the 4-hour chart could potentially take a couple days to a couple weeks to play out. So it's perfect for us as a group on the Tuesday Trader that gets together each week, and I post updates throughout the week as we're hitting different, let's just say, critical points of SOL price action, or we're getting into the Thor calls. It's the perfect time frame for us to review to know, hey, this is something that we can take advantage of potentially before the next trader session, next week's session, or right after. So it's great time frame for us to take advantage of it as a group. They're also usually pretty juicy. The bigger time frames, the larger the zones are, and generally the more profit you are going to pull from a 4-hour or a daily call versus, say, the 15-minute or the 1 hour. So what does a trade on the 1 day look like? The daily time frame. If Thor calls a trade on the daily time frame, once we hit that entry point, that trade could potentially take a week to potentially even a couple months to hit the take profit zone. So looking at these different time frames can help you decide what type of trader, well, let me rephrase. Depending on what type of trader you are, this can help you decide which time frame you should be looking at. If you're a guy or a girl that wants to jump in on the charts and you want to make money today, tomorrow, these smaller micro time, therefore usually smaller profit point calls, you're looking at the 15-minute. You're buying in and you are expecting to close your position within a couple hours or a couple days. Now, if you're not someone that's looking to buy and close out within a few hours, let's say more like the Tuesday Trader, we're looking to trade something that'll take approximate time to our next Tuesday Trader session, anywhere from a couple of days to a couple of weeks. So since that's the type of trading we are doing on Trader Tuesdays, this is the time frame we focus on. And again, there will always be variations and exceptions in these time estimations, right? You can have a call that hits the entry zone in the 15-minute chart and hit take profit 15 minutes later. That absolutely can happen. You shouldn't expect that to happen. As a general consensus and kind of flow in the market, it would generally take anywhere from a couple hours or a couple days to play out. So again, look at these time frames, figure out what type of trade you are, what is your time capacity, and have that have that help you pick what time frame or multiple time frames that you should be looking at and focusing on. And again, Thor calls will be on these 4 time frames: the 15-minute, the 1 hour, the 4 hour, and the daily. There are many other time frames you can look at, everything in between. But these are the ones that we have Thor calls on, and these are the ones that therefore we are focused on. All right, so we're going to be kind of brief with this. This is something we get. What's up, bro?
Hey, I had a question. So when you see like those cross-like candles, I notice like when they pop up, it's oftentimes like a quick bridge, and leading into the next candle, and will determine whether like and they're generally weak, is what I've noticed. Like, I mean, maybe just from what I've seen. But yeah, can you like elaborate on what those like those cross like Jesus cross like candles are or represent?
Yeah, we can actually that's kind of, that can be somewhat of an indicator. Basically, when you have that candle that doesn't really show price increase or price decrease, that just means that for that, let's say it's a 4-hour chart. That just means within that 4 hours, the market didn't really make a move up or a move down. And I think what you're trying to allude to is sometimes if you're having, say, a downward momentum and then you get one of those cross candles, it can be a reverse. And sometimes it can be, and that could be one of your indicators. So that's a good time for us to get into indicators. We can touch on that a little bit later. Bring that question up again, and we'll look at a couple of them in the chart.
No doubt.
So again, an indicator is a sign that indicates the state or level of something. That's just a definition, right? A gauge or meter of specified levels. That's what an indicator is. So how do we use an indicator? What is it we mean when we say an indicator? We mean something that indicates potential price action. Just like Young was saying, what do those candles mean that look like crosses? Do they indicate that there may be a reverse in the market? Or, that could be the bottom or the top at that time, temporary top or bottom? Sometimes that can be one of your indicators. What do we look at as indicators here on the Tuesday Trader Review and go over mostly? We go over trend lines to define our support and resistance, which are usually the diagonal lines that support our trend, an uptrend or a downtrend. Are we getting higher highs and higher lows, or lower lows and lower highs? We'll touch more on that in a minute. So trend lines with our support and resistance. That's going to be one of the big indicators that we touch on here in Tuesday Trader Review. The RSI, the Relative Strength Index. I look at the RSI as a FOMO meter. The middle line I consider to be neutral. And when we are above neutral, we're bullish. When we're below neutral, we're generally kind of bearish. But as we'll look at in the charts, you can get to where, if you think of it as neutral in a car, you redline, you get too high, the FOMO meter, you're getting FOMO'd way at the top. That can be an indicator that price needs to cool off. Just like if the RSI drops all the way down towards zero and people are paper handing, the FOMO meter is showing people aren't FOMOing, but they're completely paper handing now. That can be an indicator that there could be a reversal or a temporary bottom in the market. The EMAs, estimated moving averages. We generally look at two different estimated moving averages. One I call the short term, one I call the long term. It depends what time frame chart you are looking at to what those EMA time frames are. For the 4-hour that we usually look at on Tuesday Trader Review, it's the 50 and the 200. But what do the EMAs tell us? Well, we want to know which side of the EMAs, each side is the short term above or below the long term. Do they cross? What might that mean? And is price printing above or below those EMAs? Are we finding support or resistance on those EMAs? And we'll look at that in the chart a little bit later. But again, these are just indicators. Something that indicates potential price action, right? Indicates something that we can maybe make a trade and have a good entry to where we can make profit while managing our risk, right? What indicates that this is a good time to enter or exit a trade? So, again, things to note before making an entry into a trade. What is the current trend? Are we going up? Are we going down? Are we just kind of moving sideways? We'll talk more about how to determine the overall trend in a bit. Where in the trend are we? Does it look like we're just starting a reversal? Have we been in a long-term trend? Are we, just get somewhere in between? Where is the RSI? Where is the FOMO meter? Is it above neutral? Is it close to getting topped out and being, people FOMOing in? Or is it getting down low to where people are paper handing? Are we finding support or resistance at that neutral zone? Things to note with the EMAs. Are candles printing above or below the EMA? Are they in a bullish cross or bearish? Generally, if your short term is above your long term, you're bullish. If your short term is getting below your long term, you're starting a bearish movement. And again, is price action respecting the EMAs? Are we finding, again, what do we want in each one? Support and resistance on our trend lines, support and resistance on the RSI, support and resistance in the EMAs. So again, we said defining a trend is one of the most important things, right? So we're going to go back and forth between this slide here and this slide here, which if you've been on the Tuesday Trader review sessions with me, you know I refer back to this little diagram and chart often. So those of you that don't know what this means, let's take one step back again. So an uptrend. Now, this is kind of mode degen terminologies, right? This isn't what you're going to go find in Wikipedia and shit, all right? So what is an uptrend? Simply defined, an uptrend is a series of higher lows and higher highs. What is a downtrend? A series of lower highs and lower lows. So let's go look at that chart again. Right? So what did we say? Uptrend, a series of higher lows and higher highs. Right? Higher lows, higher highs. Downtrend, lower highs, lower lows. So let's look at our chart. You see here we have a higher low, but a lower high. Once we get the series of higher low and a higher high, if we get the higher low, you can basically, we've established we are in an uptrend. We've now made higher low, higher high, higher low. We can, I hate to say the word assume, but we can use our technical analysis and determine if we think we will then make the higher high, indicating if we hold the higher low, indicating higher high and higher low. So this is an uptrend. You see this trend line? This is what we would define as an uptrend, a series of higher lows followed by higher high, higher low followed by higher high, higher low followed by higher high. Now, what's an indication or what is a downtrend? So the first indication that we wouldn't be in an uptrend anymore is that we either make a lower low or a lower high, right? So if we have a lower high and a lower low, that's an indication that we may see a lower high. And if we do, that is indication of potential lower low. And as long as we continue this trend of lower highs and lower lows, you can see we are in a downtrend and we find resistance. So in the uptrend, you see each time we get near the line, we find support. We come down, we find support. We come down, we find support. Now, once we start the downtrend, you see we found some resistance. We come back up, we find resistance. Come back up, we find resistance. Come back up, we find resistance. So this downtrend is defined by a series of lower highs, lower lows, lower high, lower low. So what would be our first indication that we could be breaking downtrend? That would be either making a higher low or a higher high. And once we make a higher low, a higher high, higher low, that's indication that we are going for higher highs and could potentially be in an uptrend. So let's go back and look at the definitions again. So a higher, I think it's easier to understand after looking at the chart personally. You know, a higher low, which is when the low point of an asset is higher than the last low, right? So if this is your low point, a higher low would be when your next low is higher than the previous. Right? A higher high, same thing. When you reach for a new high, it's higher than the last. So we here's our high point. We have a higher high. We have a high point, and it's a higher high, right? Same thing when we look at lows. A low that is lower than the last, or a lower high, which is a high lower than the last. So if here's our high, and this is our new high, that's a lower high. If this is our low and there's our new low, that made a lower low. And you see a series of them can be linked together by their resistance to find the downtrend. Just like the support on the uptrends can be linked together to define the uptrend. Okay, so as far as indicators, charts, everything else that we've talked about and gone over, you need to understand risk management, and you need to understand that Thor is the best indicator that I've found. If you want to be a successful trader, you don't necessarily have to be able to read charts. You don't. You need to have a very, very, very good understanding of risk management. If you have a good understanding of risk management, you don't need to understand how to read charts. It can be very beneficial. It can be very beneficial to show you maybe which Thor calls you want to take, or give you indicators of when you want to take profit, or at what take profit points, how much of your position you want to close. But again, you can have a good understanding of risk management. Use Thor for your entry, risk management, stop loss, and your take profit points without ever looking at a chart. Profitable trading is finding yourself on the right side of probability, properly managing risk. Thor will help you do that. I know that was a good bit. Do we have any questions pertaining to any of these slides that we went over here? Again, all the way from the beginning, long, short, take profits and stop loss. Oh, I somehow skipped through this one, didn't I? Yeah, I did. What does spot mean? Spot versus contract and perpetuals. We hear that all the time. What's the difference? I don't know how I skipped through this. Spot trading is purchasing or selling the actual asset, not a contract or a price equivalent, actual asset itself. So that means you buy Solana, you can move that Solana to a different wallet. You can go buy an NFT with that Solana. You can do whatever you want with that Solana because you own the actual asset. Now, a contract, usually in the form of a futures or perpetual, that just simply represents the price action and value of the asset. So let's say you buy 5 Solana spot to go long. Well, you can either hold on to it forever. You can sell some of it, keep some of it, go buy JPEGs with some of it, whatever you please. But the contract, you can't just go buy an NFT with it or anything else. You don't actually own it. You just own a contract that represents the price action and value of it, not the asset itself. So why would you even want to do that? Well, that can let you use leverage. There are other reasons as well, you as far as holding wallets and needing different wallets and different chains, but keeping it simple here, contracts allow you to use leverage. And leverage is essentially adding a multiplier. If you have 5x leverage, right, and price goes up by 1%, you've made 5% profit because you've added a 5x leverage, a 5x multiplier to your price action. I don't know how I skipped that slide before, especially because that was fairly important. Open floor. Does anyone have questions? We talked about uptrends, indicators, the time frames, and just some definitions. Anybody at all, please. This is the time to ask questions and go over the basics. This is Trading 101. This is for the basics. There are no dumb questions when it comes to trying to learn.
I have a few questions.
Fire away, Annie.
So, I'm trying to figure out where to get started. So the first question I have is when you log into Thor, you know how it shows like for example, hold on, let me just go into Thor right now so I can give you an example.
Give me a second and I will log into Thor as well so we can see it and talk through it.
I'm just waiting for the access token going.
All right, and I'm gonna. Do you have Thor Pro or a regular?
I have both, but my first question, I was thinking we can use regular just so like people who have regular can see it, and then the next one we can go into Pro.
Okay. Yep. So this is Thor, just regular Thor. What you get access with holding a cycle. Okay, go ahead.
Can you see what's in the time frames? I think there's a 4-hour call.
Yes, there's multiple.
Right. So this is my question here. So for someone who may not have a lot of experience, when they come in here and they see all these multiple calls, how do they know which one to take? You know what I mean? That's been like a point of confusion for me, and I don't really know. Like, I haven't really gotten an answer of like, okay, like, do I short, do I long, which one do I take when there's a bunch of them available at the same time?
You take which ones hit entry point. If you want, if you want the best answer, take them all. But here's the thing to keep in mind, and maybe this will help you understand, is that, so let's say this long call right here, that doesn't mean if price action drops down here and enters this long call, that that's going to be the bottom and we're now going up. You'll see that this long call right here, the entry point is about 57.50. So that's this call here. You'll see it as a take profit of 60.69. So 69. So is saying down to this highly going to come up and this being resistance, 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 resistance. It's saying if we calm down and hit this entry zone, we're probably going to test that resistance point. So if you want to take this call, this is your entry. That's your take profit. And then you use the managed risk to enter how much in USDC you're willing to potentially, say, risk on this trade. And now it'll give you your stop loss. So this isn't saying that this is the top, or that this is the top, or this is the bottom, or this is the bottom, right? That's not what Thor does. What Thor does is call retest points and profit points, where it should be retesting, where it could potentially take profit. Quacker, do you mind muting your hot micing? Does that?
I mean, let's say is it possible?
Absolutely, especially if we pull up an example on a chart. This chart may be a little overwhelming to some that haven't followed along with the Trader Tuesday, but should be able to show example here, right? So here were some of the 4-hour shorts that we labeled last week when we left off, and both of them hit entry on this one, but not quite. Profit point on both these, right? Now, let's say we a daily long that was down here and calling to take profit up here, right? So you could have a daily long, but take these 4-hour shorts. Just like if we break this down, you can see where the price action was in these boxes, right? If we break that down to, say, a 15-minute chart, you could have been taking this 4 as a 1-hour long right here. But at entry, you take profit. Just this wasn't saying if we enter the top of the market and we're going down. Is if we pump these blocks, it's highly likely we retest here. And what are we testing? Our EMA. And that's exactly what we did. We came down, we hit take profit, We hit entry point on this one. We came down and we hit take profit. So both of those were profitable right there. But there could have been the long here. This could have maybe been a 1 hour long or a 15-minute long while there's a 4 hour short. Does that make sense? That's why you have to figure out what kind of trader are you? Are you a trader that you are trying to close out a trade in the next 8 hours and take this long call in the next 8 or 12 hours? Or are you looking for the call that hit entry and it's a day and 12 hours later? Do you understand the difference of time frame in them?
I think I do, but like when the time frame shows the same on Thor, like they both show as 4 hour or 1 day or whatever, then what?
I'm not sure I understand the question.
Sorry, I think I'm confused and it's making you confused. Like if the like on Thor, all the calls right now, like the long and the shorts, they're both showing for 4 hours. Right?
Okay, which is what I have mapped out here.
Yeah. So what did you mean when you said like it's gonna happen in the next 12 hours or the next day and however many hours?
Oh, well, you see, I was using my measurement tool here, and that's the difference in like this 4 hour call. When it hit entry, it was for this longer call here, it was 2 days and 4 hours till it hit profit point, right? I don't know if you can see that in the red bar. It says 2 days, 4 hours. Now, at the time of that short, you can see if we zoom in here, the market also went long at one point. So if we zoom in, see the market went long. There very well could have been a Thor 1 hour or 15-minute call that would say enter here and go long until we retest the EMA. So this is where Thor could have called a long while there was also shorts going on. But this call took place, if you look in this measurement in the blue box, this is 11 hours. So were you looking to take that 15-minute call that takes a few hours to a day to hit your take profit point and as a quick little snipe? Or are you taking the longer term, juicier calls? And right now, if we look at Thor, and we have 4 hour longs and 4 hour shorts, right? Thor isn't saying that if we pump up to here, that the market is going short and going down. What it's saying is if we pump up to here, it's highly likely we retest this profit zone. If we pump up to here, it's highly likely we retest this zone. So you can see the market could be going up right there. And Thor is calling a short. It's telling you your entry and your take profit. Just like it's a potential if we're going down, right? Price is going down. We hit entry, take profit. We hit entry, take profit. We hit entry, take profit. It's not always saying that go long because the market is going long. Thor has data points. It's math. It plans its trade by math and math alone. So as long as if we hit an entry, you set stop loss using the risk management tool and you set take profit, That's what you should be doing. And you can do this for any and every one of these calls. And, so yeah, you could have this short call set and this long call set right now. And what's going to happen is potentially either Thor's going to pump up and hit entry, or Price is going to dump and hit entry. So Thor's not saying the market's going up or the market's going down. What it's saying is if we go up and hit entry, there's a high probability that we retest this point. If we dump down and hit 4-hour entry, there's a high probability that we retest this point before we either keep going or potentially go back down lower. We got to wait for further indicators to see where we go from there. Does that help clarify?
Yeah, kind of.
Yeah, so Thor isn't saying, like, a long call doesn't mean, oh, the market's going long now. It means it's going to go long up to that take profit point, or there's a high probability that it's going to. And Thor generally is 70% or greater in its accuracy if it hits entry that it hits take profit. It doesn't mean if it calls long that the market reverses and goes long from there on in. And a 15-minute long may mean you're going long for the next few hours. It doesn't mean you're going long for the next couple days. Right? So there's always ups and downs in the market. Another thing, here's another way we could look at it. That chart I showed you all earlier, with the highs and lows, where? There we go. Okay, right? So let's say this is a 4-hour chart, right? This is the price action in a 4-hour chart. If we were to break it down and look at a 15-minute chart, we would see something like this, where we'd have the W and then make our series of higher lows and higher highs, right? And then we get to a point where we make a double top, lower low, lower high, lower low, lower high. So this is where you could be going short, right? That's where you'd want to go short. Are you sure this is where you'd want to go short? Depends what time frame you're looking at. If you're looking to get in and get out within the next couple hours, then you want that short. If you want to make money over the next week, you want to potentially wait for that higher low and go long. So the market, it all depends how far you break it down as to, here's a short, right? But in the 4-hour, we're in an uptrend. But if you break it down to the 15-minute, we're in a downtrend. Does that help understand time frames and how you can have a short while also a long?
I think so.
So, like right here may be a Thor short call. And right here would be your take profit point. So I'd be calling short, take profit. Doesn't mean that the market's going down. It just means that it is high probability that when we hit that entry point, high probability that we are going to hit that take profit point. Took me a little bit to understand that too, and that's the power of understanding time frames. Are you a trader that is looking to take advantage? I want to close my trade by today, or I want to enter a trade now and I want to close it by tomorrow. Then you're probably looking at the 15-minute chart. And let's just say relatively these numbers are going to be way off, but that would be a 16 to 17% gain if you took that short. Or are you looking to get in on the higher low and look for what's going to happen throughout the entire week? And you're going to get out somewhere around the break and the retest, if you didn't take profit here, anywhere from 50 to 40%, right? So are you giving it the week in the 4 hour long, or are you taking the 15-minute short, right? So this would be where the short call would be, and this is where the take profit would be. And then you may have another short and take profit. So if we go back and look at the real chart again, let me get rid of some of these lines because it's looking a little crazy. So just like I showed, we could just like we pumped up into this and then came down for the retest. Pump up into this, come down for the retest. Pump up into this, come down for the retest. Right? So you can see that would be an uptrend. Higher highs and higher lows, right? That's making higher highs and higher lows. But what Thor is saying is, hey, we hit here, high probability we retest. We hit here, high probability we retest. Does that help, or anybody else have questions? This is how this is how they get you.
I have another question. Now about for Pro, if someone hasn't used it yet, can you do like a quick demo to show the difference between Pro and regular? And because I guess it can get a little confusing when you log into Thor Pro, like everything shows up at the same time, and at first, I think it can get a little overwhelming and confusing. So I'd really appreciate.
Yeah, let me go over the regular one real quick, and then I'll go over Thor Pro just so people can see the differences.
Thank you.
Of course. Okay, so this is Thor. This is what you have access to with frogs. The more frogs you have, the more pairings you will have. This is where you select your pair. If you see these asterisks next to it, that means there is a call for that pair. So we're just going to stick with Solana, right? Now you have your time frame. You just saw how we went over time frames and how to look at different time frames, right? If you hit the drop-down menu, you can see that there's calls on the 1 hour and there's calls on the 4 hour. We'll look at the 1 hour, and there is a short call, and it doesn't say the percentage, but there's a short call. And then if we go to the 4 hour, you can see we have multiple longs and multiple shorts. But that's how you cycle through Thor. You select your asset, and then you select your time frame. And any trade you look at, let's go to a long just because a lot of people understand looking at a long better. This trade is saying buy Solana between $58.86 and $57.32. Sell that Solana, or at least a portion of, take profit at $60.69. Great. Well, what do I do as a stop loss? Risk management. Let's say you're willing to lose up to $10 for this trade, right? You put $10 in, and here you go. At a risk to reward of 1-to-1, you would buy 2.96 SOL at that price and set your stop loss. For a 1-to-2 ratio, you will buy 5.92 Solana at the same price, but notice the stop loss difference. So the amount of SOL and the stop loss point is different depending on your risk tolerance, right? So that's how to use regular.
I have a question here before you move on. With the RM, what if you wanted to do less than what it's suggesting to buy? Like, let's say you're just getting started and you don't want to be trading with like 2 or 3 SOL even, just because you're learning and you want to start very, very small. What do you do then?
You just adjust your stop. You adjust what you are willing to lose. So then maybe you're only willing to lose $2 in that trade because you have a smaller account. We'll calculate with 2. Well, now you're only buying 0.59 Solana at the same price with the stop loss near same. And here, 1-to-2, now you're buying 1.2 Solana essentially at that same entry point with an adjusted stop loss. So it's all, what is your risk tolerance for that individual trade? If you have a smaller trading account and you're not willing to buy 2 Solana and risk up to $10 in that trade, well, find out here what you are comfortable with. That's why this tool is so powerful, because what you just said is one of the hardest things to figure out. How do I decide what to buy, where to set my stop, and calculate my risk accordingly? And that's why Thor is such a powerful tool. It does not call the market going up and the market going down. It calls points of entry and points to take profit and points to cut your losses if you're wrong. And if you follow the steps and manage your risk properly and find yourself on the right side of probability, you are a profitable trader. And Thor helps you find yourself on the right side of probability, usually 70+% of the time. So,
but it does not have much impact if you put 2 or 10 bucks into it, because the stop loss and the entry is always the same. It's because of the ratios is the same, right? Only how much SOL you buy differs.
Correct.
Yeah.
Correct. Yes, it's going to determine how much Solana you're going to buy at that entry price as to what you are willing to risk if it hits that stop loss price. So yes, if I change this to 5, the only thing that's really going to change is the amount of Solana you're looking to buy. Now, changing your risk to reward ratio is what changes where your stop loss is going to be at. Correct. This is very important. Risk management, if you take nothing away from this Tuesday trader, other than this, let it be risk management is the most important thing you need to understand when going into trading. So please, if anybody has questions.
Yeah, I have a basic question. We have now basically 5 4 hours calls, or something like that, or 6. Does it make sense to set them all right now and then simply wait?
You most certainly can. You absolutely can. What you will want to do, and this again is part of time frame. And what is important in time frame is because if you go and set all these 4-hour calls, right? Let's say the market starts dumping, just theoretically, hypothetically. Let's just say it starts dumping and goes down to hit these calls and take profit points. What's going to happen is Thor will invalidate these calls. So you see this long call. It'll be invalidated if Solana hits a price of $65.28. So basically it's saying if we get up to that price, then these calls are I'm sorry. I'm sorry. This short. If we do drop down and we start hitting and fulfilling these long calls, right? And we hit take profit. We hit this long call and we hit take profit. You see this short, it's invalid at $53.48. So once we drop down here, which is probably near, the take profit of this short, it's saying this short is no longer valid. Right? So it's coming down toward our long calls. It'll basically erase these calls and most likely give us some new short calls somewhere else now that price has gotten down here. Does that make sense?
Yeah. I have to check then if the calls are invalidated and adjust that in the setup then basically, yeah.
Exactly, and that's the thing. If you go ahead and you set all these 4-hour calls, you know that if you come back in a couple days and check, it's probably going one way or the other. I mean, Solana could also just as easily drop down, hit the long call, come up and hit the short call and keep going in this sideways pattern where it's been, right? So, yeah, it could hit the long and hit the short, right? We don't know yet, but in the 4-hour time frame and with the 4-hour calls, you don't have to set these and then come back and check in an hour. Okay, do I need to adjust these or do I need to move them? No, you've got a couple days to potentially a couple weeks. I would suggest at least every other day or so, or every, couple days, check to see if you need to adjust if you put multiple calls. But if you do it on the 15-minute time frame, we don't have any for Solana on the 15-minute. But let's just say this was the 15-minute. You're going to have to come back in a couple hours and check where it's at. And then a couple hours after that, make sure you check where it's at. Whereas the 4-hour time frame, you have more generally from a couple days to a week plus. But you see how you could set longs and set shorts. Not sure which way it's going to go. And Thor isn't saying which way it's going to go. What Thor says is if we dip down to $57.32 to $57.86, you can expect Solana price action to retest $60.69. What it's saying is if we pump up to $66 or $65.62 to $66.26, if we pump up to that, expect us to dip down and retest $60.98. And you can just use AutoThor and let it do all of these all the time automatically, which is awesome as well. Any more questions on here, or I'll pull up Thor Pro and we can look at it there as well. But anybody have questions before I leave this? And did that help answer your question, man?
Yes, yes.
Okay, perfect.
Thank you.
So I wanted to make sure I wasn't leaving you hanging. All right,
Yeah,
give me
you're
a minute
awesome.
to-
You,
Pro.
yeah. Thank you.
Perfect. So, as Annie was saying, logging into Thor Pro for the first time can be like, whoa, what the fuck? This is kind of a lot, right? And it does look like a lot. It is a lot. But the power of Thor Pro is the filtering options. So, let's say right off the gate, I don't want to take 15-minute calls. I don't want to take 1 hour calls. I only want to look at 4 hour, and I only want to look at 1 day. And you know what? I'm not interested in going short either. So this is all the calls that Thor has lined up for longs that you could potentially take. Man, that's still a lot too. Let's say I'm only interested in calls that are going to give me at least 10% or more. Okay. Now the list is a little bit shorter. Let's say I'm not interested in all of these tokens. I'm interested on something that'll make me more Solana or Bonk since it's on Sol. So we'll click Bonk. We'll reduce this to say maybe 5%. And Solana. So now you can see there's the Solana 4 hour long calls, just like we saw on regular Thor. If we turn shorts back on, there's the calls we saw on regular Thor. So this is simply a way to filter what you want, what parameters you want. So this is saying I'll any call on Solana I want to see. Well, let's say I have a bunch of Solana and I want to make profits off of it. So I don't have any money to buy long. I just want to make a little profit off of the Solana I have. Okay, well, I could take this short. If Solana hits $70, $68.17 to $70.18, I could sell a little bit of my Solana in this range, and I could buy it back at $62.10, making approximately 11.5% profit. So that's how to make profit with the Solana you have by going short. Or you open up a short contract. But, let's say you just have USD. Well, now you just want to see the long call, so you know where to buy Solana and where to sell it. Does that make sense? How you can use a short call to potentially make profit on the Solana you already have? So let's look at this call right here in particular. Let's say you have a bag of Solana and you want to make a little more money with it. We'll go to risk management. I'm going to say $10, right? Willing to risk $10. So I'm going to sell 1.65 Solana out of my bag at $68.07. And I'm going to buy it back. I'm going to buy back this 1.65 Solana at $62.10. And I will have made approximately, what did it say? 11? Approximately 11% of the USD value. Or I can buy back more Solana, 11% of the 1.65. I now have 11 when I buy it back. Continues to pump 1.64 dollars. It will have cost me an extra right?
If I'm honest, I didn't recognize that. Yeah.
Yes. Yeah. So I, looking at the Trader Tuesday review and the way I map things out, I like to do it to take profit one, because most of the analytics for Thor that I pay attention to are if it hits entry zone and it hits take profit executed or called. Now, ratio and percentages it take profit 3. I mean, they're not all one. And that's why when we say take profit, if you remember in the beginning slide, it's closing your trade or a portion of your trade. Let's say you sell 1.65 Solana cents and you one Solana back at $62 and you buy the other 0.65 back at $60. Now you've completely closed out your trade. Here at Take Profit 1, you took a portion, you closed a portion of your trade for profit. This is where, in my mind, indicators help. Do you have indication that you're going to continue down to Take Profit 2? Or do you have indication that we could be long from here? So if there happened to be a Thor long call near this take profit point, I would probably close entire position, if that makes sense. Does anybody else have any questions? Please fire away.
Yo,
Yo.
hey, so I'm in two positions right now. One being that and H bar, but ish. But to look at where the RS side.
There's no Thor calls right now.
Well, yeah,
Thor-
Thor just
Thor
called it. Yeah, Thor just called it off. It was there was an active call for it not too long ago.
Okay.
But I guess where I'm asking
You want me to pull
for,
up the chart on it?
yeah, that'd be cool.
All right, give me a minute. Does anybody else have any questions on this before before we dive into charts? Any more
Oh, okay,
questions
yeah. No
or
problem.
anything else before I switch over to charts? I would also like to point this call out to people. People, this is so that we'll get to this range. But if we do, juiciest calls I've seen all with you guys. But okay, any more questions before I close this out and we go to some charts? This is kind of what we wanted to cover on the Tuesday Trader. I'm sorry, the Trader 101, which the Trader 101s will always be the first Tuesday of the month. So, this is kind of what we wanted to do. Get back to the fundamentals of just basic trading, what some of the terminology, what some of the definitions are, what is Thor, how do we look at Thor, how do we use Thor, how do we manage our risk? Again, how do we manage our risk? Those slides or Thor. We take it to the charts and
what is
yes, frogs do fuck, sir. Frogs do fuck.
yeah. The question was Annie, are you okay? So when I see on Twitter, you see a lot their calls of shorts and longs, and it has like the multipliers, like whatever it's like times whatever it is. I guess that's basically, I guess, what
That
know
would
you
be they had